Okay, let's make a start. Hello, everybody. Welcome to the Shaw and Partners Uranium Conference. This is actually the sixth of these conferences that we've hosted over the past 3 or 4 years, and initially doing them annually. But given how quickly the sector is moving at the moment, we've started doing them every 6 months. So we're back again after our last conference in March. I'm Andrew Hines. I head the research team at Shaw and Partners. I also write the uranium research and company research for Shaw. So welcome everybody. Hopefully we are going to have an extremely interesting morning. Very nicely timed, given some big moves in the sector over the last couple of days, with some very interesting headlines coming out of the US, with nuclear reactors being restarted at 3 Mile Island, underwritten by Microsoft, and the New York Climate Week, a group of 14 banks announcing that they are going to do what they can to support the pledge at last year's COP28 conference to triple nuclear capacity by 2050. So, globally, nuclear is certainly back, and headlines are supporting that. So, big move today. So, good timing for our conference, and we're a couple of weeks post the World Nuclear Association Symposium in London, which was deliberately timed so that we could have all of our speakers today fresh back from London, where expectations have been reset post the summer lull, and looking forward to hearing the feedback from that seminar. Let me just quickly set the scene, and we'll go to our first speaker in a moment. So just a quick snapshot of performance. What a difference a year makes. So 2023, it was huge positive performance. We had the spot uranium price rallying 90%, all the uranium equities largely moving up in line with that. But in 2024, we've seen the pullback in the spot market, spot price down just a bit over 10%, and some disparate performance from the equities. And particularly, obviously, the last 3 or 4 months where we had an exceptionally strong start to the year, everything up strongly in the first quarter, but really since April, we've been in the doldrums. So, which is interesting. I mean, I don't think I've seen an equity sector or commodity sector where the sector fundamentals have never looked better, and there's just a big disconnect between the equity price performances and what's going on behind the scenes. So, look, I'm not going to spend a lot of time running through this slide. There's some key points there which I was going to make about what's happening on the demand side and the supply side. You can read those bullet points, but clearly demand is back, nuclear is back in favour, decarbonisation of energy grids, the data centre growth we're seeing in the US, with US power growing again for the first time. There's been a steady stream of announcements on new reactor builds. We're actually even recommissioning old reactors. We've, of course, got China with their huge reactor build out and sourcing uranium for strategic stockpiles. And that's not even yet to mention SMRs, which are clearly coming. On the supply side, we've clearly had no investment in this industry post Fukushima for about 10 years, which has had all the loss of skills, personnel, IP that comes with that. We've built this reliance on Kazatomprom, for almost half the world's uranium supply now, which, as we saw from their recent announcements, may not be such a good thing. There's such a limited pipeline of new projects coming into the market. I think you can count on one hand the number of new ready to build uranium projects. All that big supply that people are worried about out of Canada with NextGen and Fission, with some big projects coming. It's really the end of the decade, so it's not going to solve the problem for the next 3 or 4 years. We've got Kazatomprom production itself in decline from over this decade. We've been living off inventories. It's very difficult to know where that's all at, but clearly those inventories are not opaque, and anecdotes sort of seem to suggest we're running to the end of those. And another spectre across the whole supply issue is geopolitics, clearly, with the bans on Russian material into the US, with now potentially expanding to China, and the whole getting China out of supply chains and not wanting China investing in projects, which we can see playing out in the Paladin bid for fission energy at the moment. So, look, interesting times. Sector fundamentals, as I say, never looked better. I think the equities have been in the doldrums for really no apparent reason. So, hopefully, we're going to hear a whole heap of stories today from some CEOs of listed uranium companies on what they're doing to solve this supply problem. And there's going to be a lot of investment opportunities for investors to make money in this sector. It's a little bit frustrating with the price pullback, but it's not often you get a second chance at this. So for those who missed the first wave last year, don't miss this second wave that's coming. So look, with those opening introductory comments, let's go to our first speaker. So let me stop sharing my screen here, Adam and Trevor, and you guys can take yourself off video and share your screen. So look, delighted as always to welcome Treva Klingbeil to our conference. Treva's been the opening speaker for all of our conferences, and she is the principal and founder of TradeTech, which is one of the world's leading sort of independent consultants to the world nuclear industry. Treva is an absolute expert in nuclear fuel supply chain analysis. TradeTech provide all sorts of consulting services to buyers and sellers of uranium and uranium products. And if you haven't subscribed to the TradeTech newsletters, I encourage you to do so, and you can find them on the TradeTech website. But Treva, look, over to you. Look, it's been a really interesting year. I presume you were in London recently and have come back all fired up as well. Everybody's bullish, so over to you.